Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, good morning, guys. Welcome back to another live stream. We're here for the big one, one of the big ones. Today we have NFP, which is non-farm employment. We are basically going to be taking a look at the jobs numbers out of the United States, which is, of course, a very key factor. Is it the most key factor? I would say right now, and this changes, by the way. This is why kind of understanding fundamentally each news sort of piece is important. NFP is certainly very important because it actually, this and CPI right now are both very, very actually close to even in importance level. Why is that? What do I mean by that? Here's the thing. I would say that in last couple years, CPI has been the more important of the two because everybody's eyes were just on inflation. Believe it or not, before all of this stuff got crazy with the inflation stuff that began due to the post-pandemic period, CPI was not. It was an event, but it was not nearly as exciting as it is now. NFP has been that slow and steady, always consistently pretty important to the markets number. Jobs are like the basic, or not even basic, the most simplified way of judging an economy. If everybody has jobs, people are employed. If that's the only metric, if you can only pick one metric to track an economy, I feel like jobs are probably the best one. It's why all the presidential campaigns, they just talk about jobs the whole time and how well they did with it and this, that, and the other, right? Because it does matter, and it matters to people too, right? Everybody wants to be employed, have income. It's a very important thing to a thriving economy. So today's jobs number is huge. And I would say, though, that it's actually increased in importance recently because now that we're closing in on this prospect of interest rate cuts, it's either going to become a quicker reality if jobs are sliding, right? If the Fed sees, oh my gosh, we're actually starting to see jobs data show cooling, we might need to quickly cut rates. And if they see the jobs market continue to do what it's done, which has been incredibly resilient, right? You look at all the numbers for the jobs data, it all comes out pretty strong recently. We'll see how that plays out today. That's why it matters, right? It matters that we see jobs stay strong, and if we don't, we have to, talk about rate cuts sooner. That's kind of the idea of the Fed. Anyways, shout out to everybody in the chat. Thank you for being here. Hey, Dan, what's up, man? Good day, Nick. Bring on NFP. What's your gut feeling? Bank reports are mixed. Good question. So we've seen a trend towards cooling economic data. You've had a lot of tech layoffs. I don't know. Let me see. I really want to quickly just pull up something on the NFP chart. So in the previous NFP, this is our NFP chart, by the way. We had a lot of fun building this, and quite the page, I think. We have everything we need here on one screen. We have the jobs that were created. These are in thousands, and I should add that. These are in thousands. Obviously, we did not add as an entire economy 353 jobs. Otherwise, we would all be, we would not be here. We would be probably like World War III or something. I don't know. Anyways, 353,000 jobs. But today we'll also see, and this last report was a really big report. So today, what's really key for us, guys, is that revisions to this number. They always revise numbers, but sometimes they revise them higher, sometimes they revise them lower. We've added For Edgefinder users who track jobs, which you should be tracking jobs, it's a really important piece, we've added revisions into our system here. So you can actually see the yellow line represents the revised numbers, and oftentimes they're not exactly the same. So last jobs data, we had a smash hit, 353,000 jobs. But remember, it wasn't just that. We also revised the one before it to be higher, right? So today, in our February reporting, which by the way, it does track January, and I got to think of a way to better illustrate that on this chart. We could do a little bit of improvement there. This was reported February 2nd, but it was on behalf of January's jobs data, right? Because we report the previous month at the start of the new one. So today we get February's data. And so the thing you want to look for is obviously you want to see a strong jobs number come out, but you also want to see the revisions not do this, right? If you see revisions do this, then that is going to be weak for the dollar. It's going to be threatening to maybe to the stock market, right? But not at the same time. Stocks, this is confusing. Can I ask you guys as an audience to answer something for me? And Dan, I'd love your take on this because it's tricky. Okay, trick question. Everybody ready for a trick question for my fundamentalists in the room? If jobs data is really strong here today, and be careful with this, it's going to sound like it's an obvious answer, but it's not. Okay, ready? Thank you, Dan. I need Dan's help, and I need all of you guys' help on this. If jobs data smash hits today, do stocks go up or down? As a whole, let's say S&P 500, not the Russell, not pockets of the market that are more sensitive or less sensitive to rates. If jobs data comes out with a smash hit today, obviously we know dollar probably up, gold probably down, but stocks, it's tricky. And you're going to, and again, if you think it's an obvious answer, it's kind of not, because here's the thing. If jobs data is hot, the market's been rallying on the idea recently that rate cuts are coming sooner. So if jobs are hot and that takes that cup of tea away from stocks, but at the same time, Dan, as you just pointed out, stocks could go up because more money equals more buying of stocks. That's fair too. That's why it's confusing, because you can make a case. You could say, and here's the thing, here's the reality. And Dan, you might remember this. In 2022, okay, in 2022, jobs data, if it came out better than expected, the market would sell off. If the jobs data came out worse than expected, the market would sell off. It almost didn't matter, right? It does matter. It's obviously a very important metric, but sometimes the sentiment of the market will find the answer that it wants to. And that's the scary thing about this. And here's coming from somebody who I would like to see a pullback in the indices. But I'm saying that the troublesome thing to me is that right now the market's narrative in terms of the stock world is everything must rally. So is it necessarily, I would actually agree, Dan, that I think that jobs data being strong should be good for stocks. That's generally how I see it. Unless, of course, the market is just super, super hyped up on rate cuts, right? Earnings are the big one for me. Yeah, Dan, totally. Dan, you're right on the money with that. Earnings at the end of the day, that is straight up. That's like as binary as I think you can get with stocks. Good earnings, good outcomes for stocks. But yeah, I think where we can be a little bit more straightforward with this is we can talk about some of the commodities, and obviously the currency is pretty easy. Not easy, but the dollar index has been on a sell-off here recently. I have recently abandoned ship short term on my dollar bullish idea. I've just seen too many numbers coming out, cooling down for now. PMIs, right? And I can list them, right? Because I'm obsessive about this stuff. PMIs, both services and manufacturing. You had GDP, right? Preliminary GDP numbers came out cooler than expected. You had consumer sentiment, which came out worse than expected, right? So you have a lot of things here that are concerning. You have yields dropping. and you have a Fed that's kind of still pointing towards rate cuts. Now, I'm not necessarily a dollar bear either. I'm really, today's number is going to help me decide what I do with my dollar thesis, right? Because right now I'm back to neutral. In fact, I'm looking at this and I'm saying if the numbers keep cooling like this, if we see cool jobs data today, I probably have to get short bias on the dollar. But again, that's why we wait for data to make sure. But again, I think here's my setup, guys. If we see jobs data come out cool today, and this dollar breaks down, what I think happens is the path of least resistance. I think the river is flowing lower from there, right? And that's where I love to trade. I love to trade when the bias is just super obvious. Like if you're a fundamentalist, the bias becomes very obvious. And usually by then, that's about where the Edgefinder starts to pick it up. All the indicators say the same thing, and we stay in the same camp. What I do love is that gold has been early to the move. I've been long gold. And I know a lot of you guys in the audience trade gold as well. This has been a just crazy runner, just shot straight to the upside. And I've been on a win streak recently, which, I kind of feel like I got away with something with this because I was dollar bullish for a little while, but I saw early signals in the Edgefinder's setups, like economic data kept coming in cool, and so I kind of semi-hedged. I started going long gold, etc., and it's been an interesting play. Anyways, today matters for gold big time. Today is like gold's Super Bowl day, because if you get jobs data that's hot today, if NFP is strong and the dollar strengthens rapidly and that happens, then likely what happens to gold is we see a sell-off. Now, it doesn't have to crash, but if you do see really hot jobs data, what you have to understand is that hot jobs data is going to push back rate cut expectations. And this move is largely, in my opinion, based on rate cuts. So, yeah. But yes, we are. Thank you, Dan. Appreciate that. I always try to add a little bit of context when I talk about like a winning trade. I wish more of my trades looked like this. This trade has been a remarkable one. And, it's very, very rare that not just me, but anyone is going to catch that kind of move on gold. It happens very, very infrequently. In the last few years, it's only happened a couple times. Here's one, here's one, here's one, here's one. Guess what happened in all of these situations? All of these situations involve some level of fear. But you might say, and I could do a whole rant on this, you might say, oh, well, this isn't fear. This is just, hey, rate cuts. Nope. There's some bank collapses going on. There's conflicts in the Middle East that are still roaring. There is the bank term funding program, which was immediate stimulus available to banks that were failing last year around this time. That expires on March 11th. There's reasons beyond just, hey, rate cuts, that this market is moving like this. Rate cuts probably get us to break the highs. Fear gets us to fly through the highs, right? That's why I only trade gold on fear. Dan, I love that. If you only ever traded gold on fear, you'd probably have a lot more trades that work well. It's my opinion. We got 30 seconds. I just want to say something too. I always give this warning. A lot of traders, especially newer ones who are excited about the big spike that's coming, they will trade this spike and then they will leave as soon as the spike happens. Our stream viewers go down immediately after. Don't do that. Stick around. The real trading happens after the news, once we have the bias and we can build setups accordingly. Coming in right after this, we got breaking news. All right, let's see what kind of reactions we get here this morning to NFP. All right, we got euro dollar down, S&P, NAS initially a little bit lower, Dow a little down, gold down. Dollar index is pushing. And there goes NAS and S&P just doing their thing. Let's see, where are we at in terms of data? All right, we had better than expected jobs, 275,000 jobs here. Unemployment rate ticked higher to 3.9%. And I am very keen to see what this average hourly earnings number was. That is your semi-inflation read that gets mixed in here as well. Over 1,000 people watching. Yes, thank you to everyone hanging out with me. If you could do me a quick favor while you watch, if this has been helpful to you in any way, make sure to hit that thumbs up button. Average hour earnings came in lower than expected. And this is going to be interesting because this is not necessarily bad for stocks because earnings cooling just a bit here. Jobs hot. Unemployment rate ticking higher. And there goes gold. Gold just said, see you later. Wow. And that's going to probably be fresh all-time highs for stocks, the euro, the pound flying, and there goes the dollar. Yeah, that is an interesting mixed report here for the dollar. But again, hot jobs data wasn't enough. It seems that look at this, by the way, I have to, but this is not actually a take profit order for me on my gold trade. I'm just using it to track the risk reward on the trade. But my stop is trailed, and I got to find another stop to trail it out at. I wish I had more moves like this, man. These are rare. I will say, crazy stock market just doesn't want to quit. Let's see where we're at with the SP500 trading down in the pre-market. And now, well, we're still in pre-market US, but pushing off of those lows. And again, let's recap these numbers a little bit here. Trading economics calendar is much faster than Forex Factory. Dan, I need to get on that. I've just used this for so long. I need to make the switch. Anyways, so unemployment rate came higher, right? So obviously not great in terms of employment factors, but jobs data came out strong. They revised that previous number, by the way. Look at this. Oh my goodness. That's why. Okay, guys, that is why the dollar's down. It's the revision. Remember that huge number last month? The huge number of 353,000 jobs created? Well, they just revised it down to 229. So yes, you had a beat this month. Same thing with last time. Last time we had a beat on the month, and they revised that number lower. Still a high number, 229, but they revised it from 353. So this is actually quite a cool jobs number. And again, Dan, this was my frustration with this stuff. And to anybody else who listened to my monologue there just a moment ago, jobs recently, whether good or bad, the stock market rallies. And I got to say, it's a little bit frustrating because although I have, other areas that I've been trading, this is why I struggled to fight this thing. I don't know where this thing goes. And until it pulls back, this market just looks crazy, right? So you have, let's see what else is on the move here this morning. Gold is flying high, as you might expect. That's a real cool jobs data number. That's gonna, probably increase the probabilities of rate cuts coming in sooner. I'd kill for a pullback. Yeah, same. It's been tough. It's been tough for me in a couple different ways with both of my trading strategies. I'm a momentum trader, but I also sell options for premium. It's one of my favorite kind of mean reversion based strategies. But when there's no, oversold status anywhere in sight for stocks, it's very hard. I'll show you this for anybody who cares. I watch a collection of ETFs that I love to trade the wheel on, some higher risk than others. So I drop down my position size, like solar panels, very small size position on solar panels. I don't have one, but I'm saying, like, if I was to sell a put on that, it'd be really tiny. My point is, everything is just going up and up and up. And I have to say, in market environments like this, it can be very tricky because a lot of people are going to make mistakes. And what I mean by this, they're going to think that this keeps going. If you've been around the block for a while, this does not continue forever. However, I'm waiting for something. Like, I can also say that I'm not going to try and call a top on gold not going to try to top on any of these crazy market rallies because they just keep going, right? And that doesn't mean they will stop. They will correct. They will reverse. It's just, is that going to happen in a day, in a month? It's just hard to call the top of something trending so hard. It's crazy to watch. Your wheel video was phenomenal. I have no options experience. I found it very informative. Dan, you got to get into it, man. I'm telling you, it's right up your alley. Selling options for premium, man, it is I've only done it for about a year, but it's just an adjustment in understanding the way, if you sell options, they deteriorate in premium most of the time. There's like a built-in edge just from selling options for premium. The downside for some people, for many people, is that it does require more capital. So if capital is not a problem for you, which is a very luxurious, privileged place to be at, then selling options for premium is remarkably awesome. Slow and steady, but hey, that's the only type of trading I like. So anyways, we stay gold bullish, guys. This one trade, I made this pitch yesterday. Can I make a quick pitch to you guys? Will you let me take a quick pitch at you? In the United States, we play baseball. So let me throw you a pitch here. See if you can connect with the bat. Okay. If you play cricket, I don't know what you call it. Is that a bat? In cricket, do you call that thing a bat? Do you call it, what do you call it? I don't know. Anyways, let me make a case to you real quick about the Edgefinder. The Edgefinder, I will show you something. I'll show you my real P&L, my real account. Obviously a little easier to do when the market is going up straight away. And I understand that that's okay. It's called a bat. Okay. Yeah. So, I have this trade on gold that I've just let run for some time. I also have a US oil trade. So I'll show you one that I've been working. This one might get stopped out. This one has just been so choppy here recently. If we hold lows, and I know it looks kind of ugly on this USO ETFs because the market hasn't opened up yet in the US. We can look at here. I've got it mirrored over here. So I've got oil and I've got gold. Both of these trades were straight up Edgefinder top setups that I then went and did some research on. I still liked the fundamentals. I've been fundamentally bullish gold here the last few weeks. And it is no coincidence that at the same time, it showed up on the Edgefinder, right? Several factors pointed more towards, and by the way, this hasn't updated yet, but when this updates, the labor market data that just came out will likely give gold another bullish read. So the Edgefinder is probably about to spike even higher in bullishness. Anyways, the Edgefinder has been giving us a nice bullish read on gold for some time. I went, and recently it was also on oil, but I think oil has lost its trending nature, so it's not getting the bullish factor anymore. My point, though, is that those two trades both came from the Edgefinder. My point with saying that is that if you've been thinking about getting a copy of the Edgefinder, if you've been thinking about being able to look through the commitment of traders data, if you want to look through more economic data, if you want our new NFP chart, right? If you want all of this stuff that we've been building, this is the between two guys that have done this for 6, 7, 8 years. We've done this for a long time together, Frank and I. We have designed what we want this tool to be, and we have a team behind us that has helped us to build this. If you would like to get a copy of this, one thing I would say before I give you a sales pitch is understand that this tool, having data, whether it be my tool or somebody else's, it equips you with something that most traders never do. Most traders only ever look at a technical chart and they try and make all of their investment decisions based on candlesticks. And in my personal opinion, you can do that and make money. And I'm not saying that you cannot, but I'm saying it is way harder that way than understanding the mechanisms of the market. And my good friend Dan in the chat is a preacher of this, and he speaks it very well on his own social media. And many other professional traders that I know, they speak this into existence, and we're kind of starting our own little fundamentals cult, and I absolutely love it. The movement towards fundamentals is growing. And the reason that I think it is growing is because people are starting to wake up and understand that markets don't move just on candlesticks. Markets move on real data. I put out this tweet recently. I was pretty proud of it. It was a little passive aggressive, might have been a little toxic, might have been a little aggressive, but I was like, does having a job matter to you? Does grocery store prices matter to you? Does real estate prices matter to you? Do interest rates impact you in any way? If you answered yes to any of those questions, then guess what? So do they matter to the market? The market and everyone participating in it, those are real world forces that we all feel. So they impact the markets too. To think that, you should just ignore those things that are real in all of our lives and then just ignore them in the markets, to me is crazy, right? It really, really is important stuff to understand the fundamentals of the market, why gold is doing this. And if you don't understand why, if you're just seeing a chart and you're just shorting this thing, right? You're in a lot of trouble right now. And there's a lot of traders doing that. And I'm not trying to pick on you if that's you. If you're somebody who's like devastated by this gold move, instead of trade against market data, what I would encourage you to consider is, first of all, manage your risk. And you probably shouldn't just hold on to that forever because, there it is. It's driving higher as we speak. Gold is not quitting here, right? You're seeing slowdown in economic data and slowdown in jobs. It's interesting, right? I bet the retail traders data shows this too. Yes, Dan, you're totally correct. I checked it recently. Here's gold. 70% of retail traders, guys. Here's my pitch to you. My pitch is, I did this yesterday. I'm going to do it again. 70% of traders are bearish on gold. Their positioning is against this gold rally. Okay. Dan says, I'd never trade without the Edgefinder, and I've been a fundamental trader longer than most people have been alive. There it is. And so here's something to think about, okay? My plea to you is that if you're somebody out there who is aspiring to be a professional trader, all the professionals in the world, when you listen to them in interviews, they talk about fundamentals, okay? Having data is crucial to actually trading with fundamentals because there's too much of it to try and just circle it in your brain. So my plea to you is that you consider getting yourself a tool like ours, whether it be ours or someone else's. There are other tools out there. I would encourage you to consider the investment that you would make into purchasing a tool. Let's say it's $1,000 to purchase a license to a tool, right? But if the cost of this $1,000 scares you, let me scare you some more. Let's say that you don't take this $1,000 offer and you lose $10,000. That's a real example for many, many people, right? You could have just paid $1,000, and it's not going to guarantee that you're not going to lose money. Nobody's going to guarantee that. But your odds, if you trade with market data, with a strategy, with good risk management, are far better than if you're just wheeling and dealing out there when it comes to your fundamental approach. Okay. So let me offer you this. If you've thought about getting the Edgefinder in the past, think of it as an investment. It is a tool. It is something that can assist you in your trading. It can be a resource to you to consider more market data. And here's a real example. Many traders, as we just saw from the retail sentiment data, are shorting this move. If that is you, or has been you in the past, right? You should consider purchasing tools, purchasing education, purchasing strategies, whatever it may be, to get yourself set up to not repeat those same mistakes over and over and over. I cannot tell you how many times I've gotten DMs from people who are like, I'm keep making the same mistakes. And again, those are costly mistakes. Instead, stop doing that. Invest. You're not lesser than if you choose to just invest in the right tools, the right education to set yourself up, right? Something to think about. Okay. Anyways, I want to leave you with something too. We are currently doing a 25% off discount on the Edgefinder. If you take me up on my offer, take me up on this idea, if you agree with me, if you subscribe to that concept, it's better to pay for tools, pay for education, and not just give it away to the market, right? Get our tools, get our life's work in the form of the Edgefinder and the tutorials and strategies that come with your purchase. If that would be something of interest to you, We're going to drop a link here in the chat. There it is. It is currently 25% off if you direct message us using that link. Some people, some wonderful people on my team right now are standing by to assist you with that. Okay. So if you'd like to take advantage of the sale, today is the last day. That sale is ending. Okay. So sad that people are shorting gold. Yeah. It's been rough, man. It's been just a straight shot to the upside, and we just keep seeing this like across the board. Everything is kind of just rallying. And I wonder what's Bitcoin doing here today. Bitcoin is not doing too much. Yields are falling. This is telling you something here. So expectations for rate cuts probably are coming in sooner. And I wonder if this livens up the May meeting. I really need this tool, but I need more discount. Just shoot us a DM and we'll work with you. Again, if you speak with someone on my team, they're fully capable of helping you work whatever needs to happen to help you out. So just shoot us a DM. Again, the link is in the chat. Yeah. Do we need a training session on how to use the Edgefinder if I buy it? Because I don't know how to use it to its max potential. That's a great question, Zeus. Again, if you DM us, we have a free course that is available for people who would like to consider the Edgefinder. If you'd like to go, we have a course built around how to use the Edgefinder. If you'd like that, just DM us, okay? All right, guys, we are going to now pivot really quick. We've got Kenzo who's going to be joining us on the show. I'm very keen to hear what he has to say about today's jobs data. So we'll go to Kenzo in just a moment. Real quick, we're going to just thank our sponsors here on the show, and we'll be back with Kenzo to talk a little fundamentals coming in right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back with Kenzo. Hey, Kenzo, how are you?
I'm doing great, thanks, and you, man?
I'm good, and it's good to have you back on the show, especially on today's day where we have, just some very interesting data out of the United States. We just had the jobs data. What is your reaction to this, Kenzo? I mean, walk us through what you're thinking about here this morning or this afternoon for yourself when it comes to this jobs data.
Yes, I was watching Nasdaq since few days ago. So on the forecast, if you checked, they said the numbers are going to go down, but unfortunately, on the employment change, the number went up. But likely enough, on the unemployment rate also went up. So which means they actually cancel each other, because if maybe we have added some jobs, the percentage for unemployment also went up. So that is not really good. And actually, this is actually good, as Powell said, that we are not really far. And if maybe all this economic news trying to agree with that, it means maybe they will cut very sooner. You see?
Yeah,
that's why we see the market actually. Sorry for that. So that's why the market is actually reacting to that. I don't think maybe the reaction is coming exactly from NFP. I think the market was just waiting for the effect, whatever that he said. If maybe things were crazy positive, I don't think maybe we were going to get some crazy, maybe this reversal here. But just because he said we are very closer to cutting the rates, and when we check, the news are not really that crazy positive. They're not really crazy positive. That is good news for us, because we know that the rates will be cut very soon. We don't know when, unfortunately.
Sure. No, and you broke that down well, Kenzo. I think this market, admittedly, as a person that would like to be in stocks, I'd like to buy indices. It's been a little frustrating to watch, but I would very much agree with you. The sentiment of this market right now is that had that jobs data come out really hot or really cold, the stock market right now is so strong that the narrative, I think, would have been fine either ways, right? So if the jobs data came out really strong, the market would have been like, oh, well, you know what? That just means companies are really strong and earnings are going to be great and, onwards higher. And if the jobs data as it did came out pretty cool, pretty weak, actually, compared to expectations, in that scenario, they're just going to point to, hey, we're going to now get rate cuts. And that's great news. So it was almost like set up where and this was, I pointed this out in the, and earlier in the stream, but in 2022, it was the exact opposite. The market was super pessimistic. If jobs data was hot, they would sell it off. If jobs data was cool, they would sell it off. So it is kind of a thing about indices. The narrative and the trajectory, the momentum is very, very, hard to call the top on the bottom on. It's been very difficult. Anyways, so you said you have NASDAQ. Do you have a position open right now?
Not yet. We
Okay.
closed some positions actually yesterday, the time the market was recovering. So now we were just waiting for the breakout on the resistance. So we actually have a pending order. If the market breaks out here, yes, we'll have actually another position. So which means we had some very nice positions. But the one that we have currently is actually US 30, which is actually is going in our favor. So, but US 30 is a bit slower because especially when we talk about like stocks, mostly the stocks that were performing very well are coming from the AI side, which we don't really have much in our US 30. That's why we don't really see any aggressive move. But S&P and also NASDAQ are the one which are actually performing very well. And yeah, we've been just looking for buys since then. So yeah, I'm actually waiting. Maybe once the market opens, we might see a breakout.
Yeah, no, and I'm glad that you broke that down for us. In terms of, this jobs data here today, what I wanted to really call into position is this idea that you had a beat in terms of the actual employment change for this month. But the big one was that last month. Remember, we had that crazy, really high number. Well, they revised that one down by over 120,000 jobs, which is a significant revision. So they revised last month's down. You mentioned that the unemployment rate, the percentage went up, and average hourly earnings were less than expected. So pretty much across the board here, other than just, of course, that beat in this month's number in terms of jobs change. I mean, that is a pretty pretty weak number. And so I guess what that does now is that really calls into question, okay, now are we going to start to see rate cuts, right? Because now if the jobs data is pointing towards some slowdown, the Fed's going to say, well, we want to keep employment steady as well. We don't want employment to slide too much. So I guess, Kenzo, does that keep you bullish on gold? Are you bullish on gold right now? Do you have any positions, or are you watching gold at all?
Yes, on gold, I'm just watching. I'm not actually trading. We actually missed this bigger move. Unfortunately, once you missed this, it's difficult to get in. So I'm just watching. So there's nothing I can do unless if maybe we have a proper structure where maybe the market will reverse, then we can say maybe we have something. But for now, for me, just to buy here, it's very risky. Even though we can see that, this is aggressively bullish. But if you check the reasons behind that, sometimes you might not really understand very well. And for me, I rather stay out until I get a better structure. Maybe the market should create a nice resistance. When it breaks, I can say, then it's clear. But since then, we never had any proper structure. So I can't just jump in.
Yeah, no, I think that's fair and probably a good thing to hear for many traders who may have felt like recently some serious FOMO with the gold trade. While I mentioned FOMO with the NASDAQ and the indices for me, I have caught the gold trade, which I'm very thankful for. I'm glad that I was able to catch that move, and I am in gold
Wow.
while I'm not in the indices. I've got this gold trade, which has been going really well. And like you said, Kenzo, I don't fault anybody who's watching this and saying, there's no like practical way to
Yes.
join this. I'd be very pressed to try and find a way to join this appropriately after it's made such a big run up. I mean, it's doing these very tiny pullbacks, and I've had to use that as my point to trail stops. In fact, I probably should trail another one. But I think that when it comes to these moves, this move is not sustainable. That does not, however, mean, let me preface that, doesn't mean I would short it. Doesn't mean I'm saying, oh, it has to come down, because it could keep going
Yes.
for some time. But at some point, this trajectory doesn't go on forever, right? So you either enter into a period of consolidation before we go higher again, or we pull back,
Yes.
we sell off. But very unlikely that we just stay at this trajectory for a long time, right?
Yeah, and that, yeah, you actually entered it at the beginning there, which is great. So, and with that, it can still double that move, especially as investors, they actually look for 2-3 months coming. They say, okay, we have a chance that the rates can be cut, so which means the dollar is gonna be a little bit weaker. So
Yep.
it's good to buy actually gold now, and most likely when the market is there, I don't know, maybe I can see the market is like watching. Obviously the market knows that not everyone's going to get around that level, so the market can keep flying for quite longer, and there is going to be some different records broken there, but it's difficult to get in there. I don't really see it as a maybe weakness. Maybe there will be a bearish move anytime soon, because things are looking good, especially when we talk about the dollar. So if they're gonna cut the rates, I think we're still gonna see some serious momentum. I just don't know how long will that continue, but that's really good.
Yeah, exactly. And that's why, right, Kenzo, we don't see much of a pullback, right? Like these pullbacks are so brief because the story is so convincing, right? Where you usually see these straight moves that just keep going and going and going,
Yes.
it's usually because it's the fundamentals are just very, very strong, making a case for or against something.
Exactly.
With this morning, you mentioned the dollar, you've got it pulled up there. It's broken a lot of its momentum. That there was that upward trend that we saw where we saw a period of, beats in economic data, but we've not seen that continue, Kenzo. We've got several factors. I listed them off earlier, but to list a few: PMI numbers, both sectors, manufacturing and services, consumer sentiment, preliminary GDP. Many of these numbers came out disappointing. And, now with today's jobs data, that really is the nail in the coffin, I think, at least in terms of that bull case for the dollar has just fallen out. And, I was
Yes.
bullish on the dollar during this period of time. And I just closed my
Yes.
losses 2 days back. And I'm glad that I did, because when it closed out of this position, that was the signal from a technical and fundamental change. Time to
Yes.
kind of watch out below for the dollar.
Exactly. So yeah, that actually means a lot, because if you see dollar index moving like that, just know that it's really aggressive, because only a smaller candlestick, when you check different pairs, you will see that no, they are actually selling or buying as long as it's against that dollar. But once we see this aggressive breakout there, it shows that there's something actually going on. And if you checked, it reacted very late compared to what we saw already on gold. Gold was already flying. It's like they were already onto something.
Yeah,
So it's not really surprising when we see it selling. And it seems like it might try to follow gold, but unfortunately in the opposite direction. We might see the market
sure.
going even lower, you see. Unfortunately, the market won't just go lower straight up. We might see some smaller reversals, but at the end of the day, the market might still reach that lower. That lower level.
Yep. Yep. Exactly. So really, really some interesting stuff here happening. And again, we've talked about this before, Kenzo, but the Fed always talks about being data dependent. And I think that as traders, we also
Yes.
should be data dependent, right? If the ones that set the monetary policy, which control heavily which way markets go, if that's what they say, typically I like to kind of mirror what the serious controllers of money are going to do. So it's kind of like that follow the money concept, right? If you're going to follow the money, you got to follow what the
Exactly.
money is, what it's going to do, what it's going to base its judgment on, which is of course the economic data. So yeah, really stuff. And Dan in the chat says great chart, Kenzo. I got to say, Kenzo, you have some of the best looking charts. Can we all agree? I think Kenzo has some of the best looking charts in terms of the way he marks things up and your colors. Everything is just perfect. I might just start copying you, Kenzo, because your charts look so good.
No, thanks for that, man.
So in terms of currencies, Kenzo, what are you thinking? So with this dollar weakness that we're talking about, are there any dollar crosses that you are actively trading or are on your watch list?
Yes, actually, we had this Euro USD. I think it was yesterday or day before yesterday. So at least today, it actually reaching our take profit, but we already locked this. So beside that, we don't really have much because I missed GBP USD. It never reversed. Actually, quite similar to what we saw on gold. So it was going aggressive. So I missed this type of. I thought maybe it will reverse a little bit, but it was gone. Unfortunately, we can jump on that. You see. So, but likely enough, we got Euro USD. So we were still holding on Euro USD because sometimes you can use different pairs as some indicators. We can see that GBP USD most likely they're gonna react the same one way or another, but not every day. So we also use the same method. But beside that, the market was actually on a downtrend. We can see that the market broke out here. So mostly the market will be changing the trend going to the upside. So this was so obvious on our side, and we just jumped on that. You see.
Yeah, and Kenzo, I want to walk through really quickly some of the data that I'm seeing in terms of the pound dollar. The pound dollar is actually getting a bullish read on the Edgefinder. I just wanted to think through this with you for a second. So the commitment of
Yes.
traders data is kind of mixed. So you have, the pound is actually more bullish overall from institutional traders, but in the latest filing, they sold some. So by the way, for those of you guys who pay attention closely to the commitment of traders data, the fresh data will come out this afternoon. So this totally could change. We'll have to watch that pound dollar scoring for next week. But there's several things here. Retail is betting against this, right? So you made a case there, and I like this for potential bullishness on the pound. Retail's betting against it. That's always a positive. I do want to clarify. Dan mentioned this to somebody else in the chat. I don't necessarily think that institutional money is out there just chasing retail stops. What is useful to me though is when I see a trend amongst retail traders, like they're super bearish on something and they're just holding on to a loss. It kind of is just a stubbornness. Yeah. What do you think about that, Kenzo? What do you think about like retail kind of piling one side of a trade?
Yeah, on that, I actually first before I answer that, I like the view on the Edgefinder there. So which means if maybe they were on the other side of Edgefinder, obviously they were not going to hold that. So another thing that makes traders to hold, we trade and we don't really want to lose, and we know that we can avoid some losses. Sometimes we can be wrong, but most of us we don't really agree that we can be wrong. And at the end of the day, you just hold, you extend the stop loss, you remove the stop loss until the account is gone, unfortunately. But there is actually also a lack of discipline. So greed, it comes when you don't really have some rules, plans that you have to follow. That is a problem. And mostly we also go through that, but it's something that you have to learn. But if maybe, let's say you have all this greed, but you have that edge finder, I think it was going to be easier for you to get out early and see, oh, this thing is 60, 87 or whatever, 60% on a bullish move. So you will see that you're not going to survive that. So you're going to get out early and you can save your account.
Yeah, no, it's so true because Kenzo, you can see that playing out in the pound dollar, as you just pointed out on the chart. It's shooting straight up, and
Yeah.
meanwhile, retail traders they make the same mistake over and over. They just short something and they short more and more and more of it until it blows their account, as you mentioned. So it is worth acknowledging when those scenarios are happening, so that you don't get caught in the same kind of trap. So,
Exactly.
anyways, something to think about there in terms of. Uh, Overall, we're getting some bullish reads on the Edgefinder for the pound. Gold also getting these things. And so in these situations, I think, I don't have the pound dollar as a trade, but if I was to look for one in this moment, personally, Kenzo, I've got to wait for pullbacks conservatively. So let me ask you, in terms of the pound dollar, if you do have a bullish bias, what are you doing to capitalize on it? Like where are you looking for a pullback to? What are you waiting for to get into a trade?
Yeah. So on that, it's difficult sometimes because this type of a structure shows aggressive bullish move. So sometimes when you have a structure like this, it might not really give you a proper reversal like that. So
Sure.
mostly the market might just give you a smaller rejection, and we can use that as a potential resistance. So once the market gets out of that stress, then we can say, yeah, let's actually look for a buy. Unless if maybe the market tries to give us a proper reversal, that will be much better. But mostly, once this happens, obviously the market knows that everyone is about to buy, so mostly you're not gonna get that. I like the structure that you had actually on gold. Mostly when the market is seriously aggressive, it doesn't really give us a proper reversal. It will just move like this,
Yep.
then mostly you're not going to get in here if you don't really understand this type of smaller reversals. So I think even GBP is going to do the same thing, but it's better sometimes to wait for a clearer ranging structure, then the market can continue.
I totally agree. And I just want to say to audience members right now who feel some level of FOMO, whether it be on gold, whether it be on some currency pairs that you're watching, whether it be on the S&P 500 or the NASDAQ, like me, I feel FOMO on those things. Full admission, that has been really, really frustrating to watch. I've been bullish on those things, but they've run really hot and they've gone really far, and they've left me behind. And so totally understand and feel FOMO. And, Kenzo and I have been doing this for years, right? FOMO doesn't go away. It's always going to be a persistent thing you have to endure and deal with. And as a trader, that's part of discipline. FOMO is not going to go away, but your discipline to not give into it is where you'll make it or break it as a trader. Would you agree on that, Kenzo?
Yes, it's actually, let's say, psychology. Mostly when we talk about psychology, when you say, oh, don't do this, it doesn't really mean that you can control your emotions. You can't control your
Yes.
emotions. But the better way to control your emotions, it means you can actually avoid your emotions by following certain rules. So if now you have rules that, oh, I know that I have to do this and that, it means, yes, I still have emotions, but just because I'm not going to do something crazy, I'm not going to trigger those emotions, because emotions that natural, you can't just control them, but we can direct them in a certain direction, you see. So quite similar to water. You can't control exactly water. Let's say maybe a lake, or like seriously bigger, like maybe a river. You can't control them. You just need to channel that, you see. So when you
Yeah.
have the plan, your plan can actually help you to channel your emotions. So instead of over risking, you know that, oh, I'm supposed to take only 2 positions, which means I'm supposed to be out. Maybe you're gonna use a proper, let's say, a smaller lot size that also can actually channel your emotions, because if it's a bigger lot size, most likely you're gonna panic when you go in negative. But if it's a smaller, your emotions won't be there that much, because the loss won't be that crazy, you see. So now you
Yes.
channel your emotions by you having that plan, but still we different. Some they might be doing it different, but you're supposed to have that.
Exactly. And Kenzo, you broke that down beautifully for us. That's why we bring you on the show, Kenzo. You've got Tons of wisdom, tons of trading experience, and your mix in fundamentals and technicals. Doesn't get better than that. I want to thank you, Kenzo, for coming on the show. And for those of you who are listening with me live, we're going to drop a link to Kenzo's YouTube channel. Do me a favor, do the channel here a favor, our team here a favor, and make sure to go subscribe to Kenzo's channel. It's Extra Hot Forex on YouTube. If you'd like to hear more from Kenzo, I highly, highly recommend it. And I ask you to do that as a favor to the show. These shows are free, and our volunteers, and for people who come on the show, they're volunteering their time to help out the community, and they deserve the shout out and a little bit of growth. So with that, Kenzo, thank you very much for coming on to the show here today and breaking everything down and sharing some wisdom with us.
Thank you very much, and your viewers. I'll see you next week.
See you, Kenzo. All good to have Kenzo on. Always a good time. Again, super smart dude. I always appreciate his commentary, and huge respect. I'm trailing a stop here, guys, on gold. I'm doing that right now here. I've gone ahead, and as Kenzo was pointing out, he reminded me that I needed to trail my stop loss here on gold. This is going to be my 1, 2, 3, 4, like fourth time trailing a stop, third or fourth time. Which, again, when I'm trailing a stop for a third or fourth time, it's a good time. And it's not always the case. It's actually really rare for me to trail a stop that many times. And it's usually indicative of that I've got one of my better trades on. So we are running hot with gold. Let's see if this can continue. I mentioned that feeling of FOMO is real. And here I am. Here's the tough part about trading psychology. I'm sitting here looking at what is a phenomenal trade, and I still have that feeling of FOMO as the stock market rallies. So I try and share this stuff with you guys transparently. You guys know, if you've watched me for a while, that my favorite thing in the world to trade is to trade NASDAQ. I love trading gold as well, and so I'm very glad that I've caught gold, but that's where I think you have to kind of worry about your own emotions, control your own emotions, not necessarily like you have to accept that emotions are a thing. But I'm trying to be real with you guys that here I am. I've got this remarkable gold trade. I probably caught the best move in the market right now in terms of not the best. Obviously, I should have just gone long in video with my entire life, and then I would be making $1 bajillion. But one of the better the better moves that have happened in our circle here on the channel. We talk about commodities, we talk about indices. Gold is one of the top movers, right, in our watch list. And so I'm working through mentally this process of, you need to just be very grateful that we caught this move, that I stuck to my rules, and NASDAQ wasn't on here, right? So I stuck to the rules, and I'm getting rewarded for it. I'm making money. So I can't, it's irrational FOMO for me to be like, oh, I wish I was at NASDAQ too, right? It's irrational. It's irrational. And I've been doing this for 8 years, and you still have like those thoughts don't go away. It's just that you learn, you can't make rash decisions off of them. The Edgefinder called out gold. I went and looked at the setups. I browsed through the data myself, and I said, yeah, I like the trade. I'll put on some risk on this trade. It was a relatively small sized trade for my account. It's not a small sized winner. It's a good sized winner. We were up moments ago about $6,000, which is a lot of money. And so it's one of those things you kind of just have to level with yourself. If you do have a good winner, and if you're sitting out of these moves, you just have to say there will be better ones ahead. There's going to be more moves ahead. You can't sit there and beat yourself up for trades you're not in or bad trades that you've made in the past. All you can do is stick to your plan. And for me, my plan said gold, right? Look at gold. I found setup on gold, and I made some money on it, right? I mentioned this earlier. Our 25% off sale is ending today. If you guys would like a copy of the Edgefinder for 25% off, we're going to drop a link here in the chat. This will connect you with someone on my staff who can give you some information about the Edgefinder. If you have questions about how it functions, if you would like to hear about what the discount is, if you would like to get the course material surrounding the Edgefinder, we do offer that as well for free. So if you'd like the Edgefinder, with your Edgefinder, you can get the course to go through how the software functions, how it can be used in your trading. If you're not sure if it would benefit you, message us and we will share some testimonials of people who I'm telling you guys, this software, I do not trade without it. I don't leave home without it anymore because now it's on my phone. It's on my desktop. It's in the cloud, by the way. Look at this. It's browser based. We've got it in the browser for you. It's remarkable. And I say that, humbly, because it's so much further than I would have ever been able to make it by myself. I have a wonderful team of talented people who are assisting to make this what it is. So again, pick up a copy. It's 25% off. The sale's ending today. Shoot us a DM using that link we just dropped in the chat and get yourself some market data, level up. You got the whole weekend ahead of you. You might as well play around with the tools, get familiar with them. It is a playground for sure. Anyways, with that said, thank you guys very much for tuning in to today's live stream. I hope you got value out of Kenzo and I's conversation. Some of Dan's contributions in the chat today were wonderful, and reacting to that cool jobs data. From here, I'll be putting out a video here today, likely going through my findings with this and kind of summarizing it for you. If that'd be helpful to you, then look out for that. Thanks very much, guys. Have a great day and have a great weekend ahead. See ya.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.